All right, so what's happening in the world of retail today? In my view, I think we're actually in the perfect storm. Essentially, leading up to 2008, excuse me, I have a little problem here. Here we go. Leading up to 2008, there was a broad trend where a lot of aspects of real estate were being driven by the market and Wall Street and major equity funds. And there was tremendous pressure on the retailers to show success through expansion. And what that started to do was really drive the expansion efforts of the retailer, took it away from sound sort of practices to just opening units in the market. And what that started to do is really, for a lot of the major national brands, is they started to get too many units, and that caused two things. One was sort of a cannibalization of their own sort of core business. But the second, which I think is more meaningful, was they started to dilute the brand. In other words, if you took some of the major fashion retailers in the country, say if you go back to the early 2000s, they had some exclusivity about them. They were sort of unique and interesting. And then by 2000, they'd kind of tripled their amount of units. They were in almost every mall, and they became sort of more of a commodity brand and sort of less interesting and more ho-hum to the consumer. The second thing that happened in 2008 was with the crash, the market crash, the boomer, which for the last, say, 15 to 20 years had been the quintessential retail generation. And they were an awesome retail generation because basically they were monolithic in their behavior patterns, and they were sort of, I always say, ostentatious. I'm a boomer, so I guess I can beat on them. But they were ostentatious, over the top. They were really focused on the phone, the purse, the shoe. So for a retailer, it was very easy for them to sort of target and sort of hit a concept sort of out of the park because it was such a monolithic approach to what they were doing. When the market came, a lot of the boomers, at least particularly on the short term, lost a lot of their net value, stopped spending. That coincided really with the next generations coming up, the X, the Ys, the millennium, were starting to come in as a major buying force. And while they had significantly less dollars, they were still a significant part of the population, or are a significant part of the population. And what that means is, the retailers had to now adapt to this new generation coming into the market. And what was compounded by that was the fact that the new generations coming up, to me, are much more fragmented than the boomers, where the boomers were monolithic in their choices. The young generations are much more fragmented. There are subsets within each of the market demographics, and it makes it harder for a retailer to target en masse. I mean, I have two teenagers. What's really interesting to me is they all wear different shoes, different clothes. They all have different phones. And they seem less focused on a specific brand rather than kind of value and quality. But there are still components of the new generations, and Heather can speak to this, that also are boomer-like. So what we have in the retail landscape are the retailers dealing with an overexpansion and dilution of brand, and then adjusting to this new shifting demographic, which is infinitely more complex than it used to be. The third component of the perfect storm, which probably brought the wave from 45 feet up to 60 feet, was the fact that the internet leading up to 2008, and I was on many panels in the early 2000s talking about the internet and its impact on shopping. And at that time, it was really more hype than anything. It was only really representing about 3% of sales, and it wasn't having any impact at all on bricks and mortar retail. In fact, the bulk of the sales were easily done in the stores. What happened after 2008 was the internet was starting to gain momentum, and now I think, Heather, the retail sales are about 18%. But the more important thing is they're vertical. So the internet is becoming a prominent force in sort of the retail landscape. And what does that mean to bricks and mortar retail? Well, what it means is the commodity-based shopping stores, the mid-sized boxes, the larger boxes are becoming less and less relevant to the consumer. Those sales are starting to shift over to online business. That means what we're going to see, in my opinion, on the B and C locations for both power centers, commodity retail, and even the mall, is you're going to see those things going away. We are not coming out of this recession in a period in terms of retail, in terms of expansion. we're actually, I think, going to be contracting a lot of real estate. There's going to be a lot of repurposing of existing centers, and you're going to see some go away. In our market, you're seeing a couple. One is the Landmark Mall in Alexandria, and even in Springfield, there's significant talk about repurposing that area as well. So these are sort of three significant trends that I think are having a dramatic effect on the retail landscape today. The final one of the major, I know there's five, but the fourth one, which I think is the most significant too, is the fact that the young demographic coming in is increasingly more urban in focus. Where the boomers, there was a mix of sort of urban, but there was, the suburbs were really developed by that generation and really embraced by it. Two things are going on. The XYs, the millennium coming in, are urban. They want to live downtown. The focus now is on an urban lifestyle. It's on the urban core. Or if they're in the suburbs like Reston, they want a sort of more urban and urbane experience that's heavily amenitized. They're less into buying. They're sort of less into the suburban dream. But also related to that was I think the boomers, too, that used to live in the suburbs, there's a movement for them to go back into the core, too, that they're not going to be a generation that lives in a sort of monolithic retirement home. They're going to want to embrace the community well, stay connected. And so you're seeing these two groups, both the young coming in and then the empty nesters, all starting to gravitate towards a more amenitized project and also a more urban project. I know if you talk to our retail brokers and strategists in our company, if you go back pre-2008, I would say 75% of our business was focused on the burbs and the suburban markets. I would say right now there's about a 75% focus on the urban core. So we've seen the shift of retail focus to be all within inside the Beltway to a large extent. And that's where the retailers that are coming into the market, the new ones, want to be. That's where the ones that are here want to expand. And so there's been a tremendous change of focus. What that results in the suburban markets in terms of retail is that the suburban markets are going to have to address these issues. In other words, conventional centers that are sort of focused strictly on commodity and convenience with the car, while they'll still maintain relevance, I think at the neighborhood level, new projects coming in are going to have to sort of address a higher level of focus back towards, I think, immersive retail and amenity-driven retail. So on a final point, which is more on the implementation, is I think moving forward for both planning staff, I think for county officials, and for the development community, and really the community stakeholders, strategy is really the key to success moving forward. I think the idea of speculative development, I think, is gone in retail, at least in this development cycle and probably in the next one, is that it's going to be focused towards targeting specific markets, specific demand, and tailoring the retail merchandising mix and approach to the retail more to the specifics of the market. And I know the Mosaic project to me is really interesting because from my perspective, it's one of the first projects that's sort of representing, I think, this new paradigm in retail. If you look at the merchandising mix, and one of our top brokers, because I was chatting with them about it last week, was saying that they thought it was probably the most imaginative and creative kind of approach to merchandising they've seen in a long time. And I think it reflects the new market realities where centers have to trade regionally, they have to trade locally, and they have to sort of be unique and meaningful to that market. In other words, they have to be able to reach out and connect to the marketplace. If you look at retail traditionally, it was ubiquitous. You had this kind of even-handed where you in a mall in St. Louis was very similar to a mall in Minneapolis, which is very similar to a mall in our market. There was this kind of ubiquitous approach. Now it's focused on specificity, it's focused on context from both the architecture, I think, the placemaking, and then the merchandising mix as well. So all these factors are kind of going on in the world of retail today. I think it's very transformative. I think it's incredibly exciting to be in it. And for a lot of developers now with existing assets, it's incredibly scary because I think many power centers now and owners of those types of real estate are going to be looking at fairly short-term viability and having to come up with redevelopment plans and efforts.